Hi everyone, in this video I'm going to answer which one of these fintech stocks is the best one to buy. Sofi stock, UpStart stock, or PayPal stock. I'm going to measure these three stocks across four metrics, starting with revenue. So let's get right into it. I'm looking at trailing 12-month revenue for SoFi Technologies, and it's delivering very nice growth from a little over 600 million in the beginning or middle of 2021 all the way up to 1.6 billion most recently. Upstart, meanwhile, was experiencing very nice growth and then that has turned negative. Upstart, of course, uses artificial intelligence to infuse its lending decisions, to infuse its lending models to make better decisions. However, Upstart's been experiencing declines as lenders on the platform are running away, essentially saying, hey, we don't want to make loans right now when we're afraid of where consumer balance sheets are going to be 6 months from now, 12 months from now, as consumers have begun spending down their savings to keep up with their spending level as inflation has made the cost of everything more expensive. PayPal, meanwhile, has also experienced very nice growth, growing from a little over 18 billion before July of 2020 all the way up to 27.5 billion. Of course, PayPal benefits more when people are spending money online because it offers a lot of convenience. If you use PayPal, you get to put your payment information in once, and you can use PayPal across all these other platforms instead of having to log in your payment information on each new website you join to shop from. But as consumers have been spending more time and money away from home in recent quarters, that's been a little bit of a headwind for PayPal's growth in the near term. The next metric I wanted to look at is cash flow from operations, and SoFi has been going in the wrong direction here, going from slightly positive cash flow from operations all the way to negative 2.418 billion. Although the fact that it received its charter and it had to its bank charter and it had to fund the bank with billions of dollars is playing a part here, but longer term that can help SoFi attract cheaper customer deposits so it's not having to rely on outside funding for its lending, right? The way that Upstart is struggling with right now, because Upstart is not a bank, it does not have customer deposits, so it relies on investors to put up the money so that it can make loans. SoFi, by getting its bank charter, kind of reduced that risk, right? And it lowered its cost of capital. Upstart also, after turning cash flow positive, now that growth was decreasing, it's going in the wrong direction. Cash flow from operations of negative 252 million. PayPal, the only one with positive cash flow from operations among these three at 1.157 billion, but also PayPal going in the wrong direction. Of course, PayPal was a beneficiary during the pandemic when we were all spending a lot more money online. So it's understandable that the cash flow from operations would decrease from the highs during the pandemic. The next metric I wanted to look at is net income for the trailing 12 months. And starting with Shopify, it experienced a dip in 2021 and 2022, but it's been doing a nice job increasing its or decreasing its losses, so increasing in terms of economies and scale. As revenue has grown, its losses have shrunk. That's good news for investors. Negative 320 million though in net income in the trailing 12 months. Upstart turned positive, and that got investors really enthusiastic about Upstart stock when it delivered several quarters of TTM positive net income, but that has turned significantly negative from more than 100 million in TTM net income all the way to negative 108 million in TTM net income, which stands for trailing 12 months. PayPal also experienced a nice boom and its TTM net income rose to nearly 5 billion. That has decreased as online spending has fallen, but it's going back up again, and 2.42 billion on if we look back, revenue of 27 billion. So it's got about, it turned about a 10% or a little less than 10% net income margin, which is impressive for a company that's still growing really nicely. In its most recent quarter, PayPal added millions of new customers, right? So it's still growing. It's got 400, more than 400 million monthly active users and growing. And to be growing at that rate and still positive profitability, positive cash flow from operations is impressive to me, right? For me, I discount growth companies that are losing money on the bottom line because it's easier to grow if you're willing to grow at a loss. If you're growing profitably, your growth is understandably going to be slower, but at least you're still generating profits and you're growing. I value those type of companies more high, more strongly than the non-profitable ones. So let's look at the final metric I'm going to measure across, which is valuation. I chose to use the price to sales ratio to measure them across the same metric because SoFi and UpStart are negative cash flow and negative earnings per share. So looking at this metric, SoFi at a price to sales of 3.789 is the most expensive. UpStart is the least expensive at 1.870, and PayPal is in the middle at 3.141. All of these are trading near their lowest price to sales ratios in recent times. But if I had to pick one of these three stocks to buy, one of these three growth stocks to buy, I'm choosing PayPal. Although SoFi is catching up rapidly, SoFi is doing a great job in recent quarters catching up. I'm still going with PayPal for now. I'm gonna keep watching SoFi. If it keeps making the kind of progress that it's making, it wouldn't surprise me if it takes over as a better stock than PayPal. But for now, I'm still going with PayPal because of the profitability and the cash flow. All right, so that's all I've got for this video. As always, I appreciate your viewership and I hope to see you next time for another video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.